Hello traders and welcome to lesson 8 of the ReadFX Beginners Forex Trading course. In this lesson then we're going to answer the question, what are trading sessions? So I've made you a nice little drawing and this has been done in GMT. So I live in the UK and that's my time zone. Now this is equivalent to UTC plus 0. So you can easily adapt this diagram to where you are just by moving the sessions forwards or backwards the number of hours that you are from UTC. So if you are UTC plus 3, for example, you would just move this along 3 places. Now, there's 4 main sessions drawn on this little chart. There are more sessions than this, but these are the main ones. So for example, London also overlaps with the European session and it has the German markets and stuff like that. But for this purpose, I've just put London. Now then, Sydney and Tokyo are known as the Asian session, and this is the period when the Forex market is essentially asleep. This is the period of the lowest volume. Now, the most volume happens during this period here, between 1 and 5 in the UK, when London and New York overlap. So the most volume is actually the London session, followed by the New York session. And the overlap period when both of these markets are open, this 5-hour period is when the most money is pouring into the Forex market. So this is the best time to trade. It has the lowest spreads and it's very stable. The overnight session, or for me at least it's overnight, depending on where you live, this might be daytime. But the overnight session does not have as much money in the market. Now each one of these sessions has its own characteristics and we're going to look at that now. So the Asian session then, so Sydney and Tokyo sessions typically range because they have low trade volume. So there's not enough money in the market to really move it. And we're going to look at this on a chart later on. Now the European session, the London session, has a much higher trade volume than the Asian session and often breaks out of what's called the Asian range early in the morning. And again, I'm going to show you this on a chart in just a second. Finally, we have the US session. So the New York session overlaps the London session by about 5 hours, depending on daylight savings. The overlap period has the highest trade volume by far. Now then, an interesting little quirk of sessions is that they tend to reverse each other, especially the US session. If prices dropped in the London session, they will likely rise in the New York session. I'm going to show you this in a little bit of detail now. What you're looking at here is a screenshot of my trading view, and I've got what's called a session indicator on the chart. So what it does is it puts these stripes down the chart and each color is a different session. So we start on the left here. The black stripe, this is the Asian session. The green stripe is the London session, and the red is the US. Now this little thin strip of yellow or orange that you can see down the middle, that is the overlap period. That is that 5-hour period when London and the US are open at the same time. So how can we use sessions? How are sessions helpful for traders? Well, as I mentioned, the Asian session, which is the black stripes, not much is going on. They tend to be sideways in a range. So if we just look at this one, you can see it's very, very sideways. This one we get a little bit of movement, it moved up slightly. But if we just work our way across the chart, you can see that most days, the Asian session is just completely sideways in a range. Now this is known as the Asian range. The London session is when the money starts to pour in. By volume, London actually has the most money of all the sessions. So this is when the market has the most money pouring in. And you can see on this day, immediately, London breaks out. You've got this little tight Asian range and immediately the London session breaks out of the range. So this is what's called the London Breakout. And this tends to happen most mornings, somewhere between 7 and 9 o'clock. And if we just look at the next day, we get a little Asian range after a move up, and then London immediately breaks it. The next day, Asian range, London breaks it. The next day, Asian range, London breaks it, and on it goes. Finally, what I want to show you is the US session. So the way that the US session likes to reverse the UK session is very interesting, and it can be very profitable for traders. So if we have a look then, we can see on this day, the London session clearly went up. Then the US opened and pushed it all the way back down. So the London session went up and the US session went down. Now this doesn't happen every day, but it does happen a lot. So if we take the next day, we can see that the London session went up a little bit and then it was going down. Now when the US opened, the London session had been going down. The US pushed it all the way back up. This day and this day, this great big two spikes that you can see, these are news events. So let's have a look at these. The London session was going down and then the news event happened and it shot all the way up. Now we move into the US session and the US session pushed it all the way back down. So a very clear reversal on this day. The next day we get the same exact thing but the opposite way around. The UK session had been moving up until news came out, and then the US session opened and reversed it all the way back up after the drop. And if we just work our way across the chart, we can see very quickly London goes up, US goes down. London goes down, US goes up. London goes up, US goes down. London goes up, US goes down, and on it goes. Now, as I said, it doesn't work every day, and some days like this one, again, this is a news event, what you tend to see is an initial reversal followed by a continuation. So on this day, London was pretty sideways until the news. Then it shot up. Now the US immediately reversed it back down, and then the US pushed up again. So you still, even if you don't get on days like this a complete reversal, you still get that reaction reversal. So as I said, this is very useful to traders. Depending on the positions you have open, you can make a decision. If you're now approaching a new session, you know it's likely to reverse. So if your trade is in profit, you're likely to give a lot of profit back. If your trade is currently not in profit, then it may be in profit very soon. So it's a very handy piece of information to have. Okay then, in this lesson we looked at trading sessions, times of high and low volume, and session reversals. In the next lesson then, we are going to look at chart types.